Did you know that the very structure of our financial system could be keeping entire nations in debt? The Federal Reserve, often simply called the Fed, stands at the heart of this complex web, yet its workings and implications are not widely understood. The Federal Reserve serves as the central bank of the United States, a pivotal entity in the global economy. Despite common misconceptions, the Fed operates as a private institution. It is not owned by the government, but rather by a collection of private banks, making its primary loyalty not to the citizens of the country but to its shareholders. One of the primary functions of the Federal Reserve is to manage the nation's money supply and interest rates. But how does it do this? The Fed can increase the money supply by purchasing government bonds, thereby injecting money into the economy. Conversely, it can sell these bonds to take money out of circulation. Here's where the intrigue deepens. Every time the Federal Reserve issues currency, it charges interest on these funds. Imagine printing $100 but then charging $110 for it. The math simply doesn't add up. If only $100 exist in total, how can $110 ever be repaid? This mechanism ensures that debt increases over time, locking the economy in a perpetual state of indebtedness. Moreover, this system of debt and interest has broader implications for taxation and personal income. In the United States, income tax is levied on wages. This tax is a significant source of revenue for the government, which it uses, among other things, to pay interest on the debt owed to the Federal Reserve and other creditors. This cycle of borrowing, interest payments, and taxation raises questions about the sustainability and ethics of such a financial system. Critics argue that this form of taxation on wages is unconstitutional, citing that the payment received for work is private property. They reference the Fifth Amendment, which protects against the seizure of property without due process. Yet errors in tax filing can lead to penalties, including seizure of property or even incarceration, highlighting a stark contradiction in rights versus practice. In summary, the Federal Reserve, a privately owned entity, plays a critical role in shaping the economic landscape through its control over the money supply and interest rates. This system perpetuates national debt through a cycle of borrowing and interest that can never be fully repaid under its current structure. The implications of this system extend into the realms of taxation and constitutional rights, presenting a complex challenge to economic freedom and stability. As we peel back the layers of our financial system, it becomes clear that understanding the Federal Reserve is crucial for anyone concerned with the future of economic policy and personal liberty.